Well, stop us if you heard this before, but shares of General Electric are having another bad day. The stock sliding on Tuesday. That is the 7th straight losing session for GE. Stock nearing its lowest level since the flash crash of 2015. Is there any relief for GE in sight? Craig Johnson joining us now. Chad Morganlander of Washington Crossing Advisors. Chad, I'm going to start with you. You're kind of known as a value guy. You look at the metrics on GE, you think, okay, price to earnings, price to sales, price to book, all these things are down. They look attractive. Are they, or is it a value trap?
I would be concerned, because what you have to do is not only look at the market cap, but you also have to look at the total amount of debt that they have on their balance sheet. So that's one reason that we would stay away from General Electric. A couple of other reasons for us is that they have a concentration risk in oil and gas. We look at that as unfavorable. Over the course of the next month, you could see more selling pressure, due in part because of the dividend concern, dividend cut, as well as more tax selling coming in. We think, though, overall, if you have this equity, you want to hold it for the time being, that potentially over the course of the next 12 to 18 months, you could see a spin out of several divisions of General Electric, which may embolden risk taking and actually elevate the stock temporarily. But again, if you have the company, we would just be holding it. For new investors, we would stay away.
But before we go back to or go to Craig, I want to ask you that because they bought Baker Hughes, 16% or so of their revenues are now oil and gas. So and I was thinking the other day, do you believe there's a chance that maybe GE could, and there's no news on this, it's just speculation, that GE could unwind some of these deals that they have done in recent years and try to get smaller?
I think that will be the case. Remember, the old General Electric was very consistent, revenue consistency as well as operating margin consistency. And I think through these other acquisitions, you're seeing a little bit more cyclicality to it. So you could see new management come out with a game plan that they want to go back towards consistency, and they may spin out some of the more cyclical divisions.
All right, Craig Johnson of Piper Jaffray. We are at a 5-year low on GE stock. It seems like there's no bid out there at all. Is there any bottom in sight for the name, or has it already been hit?
Well, Brian, the stock has already been hit, but it really hasn't found footing yet. We talked about this over the last couple of weeks, and it broke through kind of key support around 23 and change, and we're starting a whole nother leg lower. I mean, this is trying to catch that proverbial falling knife at this point in time, and as Chad talked about, it sounds like there could be some potential restructuring, potential spin-off of units. Again, that's all kind of hypothetical. But until we see some more evidence here in the charts that things are bottoming out and you're finding support, this isn't really a stock you want to step into. I mean, it is 36% off its recent highs. Yes, it is the oldest standing name in the Dow Jones Industrial Index. But at this point in time, there's no footing. So I'd rather buy other stocks in the industrials where we've got a better trend, better momentum, and probably a better investment over the near-term time
Can we bring that chart back up? And this is I'm going to take the segment a little longer because it's an important stock. It's owned by a lot of people, a lot of individuals, a lot of funds. Doesn't look like there's any support. When I'm looking at that, Craig, it's like an icicle hanging off a roof. I mean, is there any? I'm not making light of it. Is there any support there at all? What's the next key level? $20? I mean, we're here now.
Well, Brian, you're through that, and after this you start getting into the teens, you know, $15, $18. So I mean, it's still a meaningful percentage potential downside from here. So until we get that kind of final washout, and again, yes, I know it's oversold, but the stock can stay oversold just like stocks can stay overbought for extended periods of time. And right now, it looks like your next best support is probably somewhere $15 to $18. So I can't step up and buy that yet.
Wow, teenager. Unbelievable for GE. Thank you very much, Craig Johnson and Chad Morganlander. Appreciate it, folks. As always, thank you for tuning in to Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.